Hello investors and future investors, welcome to the channel. For today's video, we're going to play a simple game. That game is going to be what option strategy. Now the reason why we're going to play this game today is to see how much you guys have learned from watching my video. And for those of you that's going to be new to the channel, you will learn a lot today. So those of you that are new to options trading, you're trying to use options to make some additional income, then definitely this is the right video for you to start learning. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to play what option strategy would you use. Now, what I'm going to do, I'm going to go into 3 different stocks. I'm going to show you some basic technical analysis, and you guys are going to let me know in the comments below if you had to trade this stock, what option strategy you would be using. At the end of the video, I will be telling you which option strategy would be best based on the technicals of these stocks. Now, before we go any further, I always have 2 basic requirements from my viewers and also my subscribers. Quite simple. Number 1 is going to be always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. Number 2 is going to be always make sure to have an exit strategy. If the trade decides to go against you, you will need to know how to get out of the trade. That being said, let's go ahead and get down and dirty with options. So the first stock on the list is going to be none other than SoFi Technologies, ticker SOFI. So we're going to be jumping into the Robinhood Advanced feature right here. Now we're going to go ahead and go to the 1 year mark. Now, SoFi is currently trading at $14.34, which is going to be above this blue line right here. This blue line right here is going to be what's known as your MA200. As you can see to the left here, MA200. MA200 is another name for it. It's going to be your 200-day moving average. What this blue line does is that it actually tells you where the stock has been trading for the last 200 days or 6 months. So the current price of 1434 is above the 200-day moving average. The 200-day moving average is right around the 1250 mark. Now, we're going to go ahead and jump into a second technical indicator, and that's going to be your RSI to the bottom here. Now, if we look at the RSI, we go all the way out, you're going to see the RSI is around the 50 mark. Just for analysis, the RSI goes from 100 all the way to the top to 0 all the way to the bottom. What most traders are interested in is the movement between the 70 RSI right here and the 30 RSI right here. Being that any RSI that goes closer to the 70 mark tells you that the stock is going into overbought territory, and vice versa. Any RSI going closer to the 30 mark tells you that the stock is going into oversold territory. So we use these technical indicators to decide what option strategies that can be used. So with an RSI of 50, a 200-day moving average, the stock trading at around $12.50, and the current share price of the stock, which is higher than the 200-day moving average, is going to be at $14.34. What option strategy would you use on this stock? Let me know in the comments below. I will be revealing what option strategies I will be using to the end of the video. Now we're going to go ahead and we're going to jump into our second stock. Our second stock is going to be none other than a crowd favorite, which is going to be Palantir or PLTR. Okay, here we are on Palantir, and we're going to use the exact same technical indicators, and we're going to use the exact same outline, which is 1 year. Now, the current price of Palantir is $132.17, and as you can see here, that price is way over the 200-day moving average. The 200-day moving average is around the $75 mark. So the current price is almost twice as much as the 200-day moving average. Now we're going to go down to our RSI, and the RSI on this one now is about 60 RSI. So remember, the 60 RSI is moving closer to the 70 mark. So now that you guys see, this is trading insanely high, which is almost twice the price of the 200-day moving average, and an RSI that's going into overbought territory. Which option strategy would you guys use? Now we're going to jump into a third one, And that third one is going to be none other than CRWV. Now, CRWV is CoreWeave, and this one is very, very new to the stock market. It recently got listed. It hasn't even been a week since it got listed. But the reason why I chose to use those three different stock, I wanted to show three different industries and three different stock movements. Now, because this stock is extremely new, we don't have much information to go off of. But once again, the price is all the way up here at $152.34. Because the stock is extremely new, we do not have any information from the 200-day moving average because the stock hasn't been in existence yet for 6 months. What we can use, however, is the price that the stock debuted at. So you simply go to the line right down here and you're going to see it. So when the stock got listed, it got listed at the $40 mark. Currently, it's trading at 152, which is representative of 3 times what the stock debuted at. Now, once again, because the stock is so new, we don't have any information on the RSI to go. So I'm really intrigued to know what option strategy would you do on CoreWeave. Now, I'm going to go ahead and I'm going to release the results. So with SoFi, let's go ahead and get into it. And I'm going to show you the option strategies I would be using. So let's go ahead. We're going to open up the options chain. And to get that done, you simply go to trade SoFi options right down here to the bottom. Now, based on what we just saw on the chart, with SoFi, I'll be doing what's known as a cash secured put. You're going to go to sell. We're going to go to put. We're going to choose a strike date. Let's go with June 20th, which gives us 10 days to expiration. And I'm going to be going with the 1250 strike price. Now, obviously, you guys know why I'm going with a 1250 strike price, because that price matches up with your 200-day moving average. Now, this is a sell income option strategy, so I'm going to be paid. The amount I'm going to be paid is going to be $6. Now, $6 is not much, so sometimes you go to do these option strategies and the premium is not worth it. So you can simply go extend your expiration date. So we're going to go to July 3rd, which gives us 4 weeks. We're going to be looking for the exact same strike price, which is $13.50. And now you're going to be receiving $13, which is a lot more decent than receiving just $6. So there you go. Now, there's another option strategy that I would use on SoFi based on what I saw of the chart. And now I would go to buy, I would go to call, and I would go for, I'll choose the expiration date of, let's go here. I'll choose the expiration date of June 18th, 2026. That gives me 373 days to expiration. The reason I'll choose that date is because based on the chart I just saw, SoFi looks like it's about to make another upward move in the right direction. So I would go ahead and protect myself and I would go and buy a long dated option, or a LEAPS if you may. A LEAPS stands for long-term equity anticipation security. So buy, call, long expiration date, more than likely a year and above, just to be safe. And then we're going to be looking at the price we saw at a 200-day moving average. Now that price is not here, so we're going to go for the next best, which is going to be $12. And now we're going to have to pay. Now this one, as opposed to the first one, is a buy option strategy, so we're going to have to pay. The amount we're going to have to pay is going to be 4.85. Now with this long call, this is a very simple option strategy that anyone that's getting started with option should definitely consider it. Once you buy this option strategy, you leave it in your account portfolio. You do absolutely nothing with it. You give yourself a year in order for this share price to go up. Over the course of a couple months or whatever, this share price will go up. It's almost guaranteed because this stock market always goes up. Once you meet a target profit that you're comfortable with, you do not have to wait until the year for this to expire. Simply close the trade, lock in your investment gains, and Bob's your uncle. Now, for the second stock, which is going to be Palantir, PLTR, this is the option strategy that I would be using. So we're going to go to trade Palantir options here. And then just like SoFi, what I would be doing, I'll be doing a cash secured put on this. So I just demonstrated the cash secured put, so I'm not going to jump into that again. Now, there's another strategy I would use for Palantir, and this is especially good if you're trading with a small account. So we're going to go to sell, we're going to go to put, We're going to choose our expiration date. Once again, let's go with June 20th, which gives us 10 days to expiration. Now we're going to go ahead, we're going to choose our strike price. What I'm looking for right now is an 80% chance of profit. And at an 80% chance of profit is going to be $124 strike price. I'm going to go ahead and choose that. Now I'm going to go to buy. I'm going to maintain my put. I'm also going to maintain my exact same strike date. I'm going to go right here, one right below the current one, and I'm going to go ahead and click into that. This new option strategy is known as the put credit spread. Now, the put credit spread is a perfect option strategy if you're trading with a small account. This allows you to do pretty much a cash secured put using a lot less money. Let's go ahead to continue and review order. If you were to do this option strategy right now, you would be getting $19. The amount of collateral you would have to leave is going to be $100. That is representative of a 19% return. A 19% return, investors and future investors, is extremely lucrative. So that would be the two option strategies I would be using if I were to be trading Palantir. Now for our last stock, which is CRWV or CoreWeave, this is the option strategy I would be using. Let's go ahead to trade CoreWeave options to open up the option chain. Now, here's the strategy I'll be using with this. Based on my personal experience, my portfolio goals, I would absolutely leave this stock alone. There is nothing I would do to this stock. The stock market has more than 4,000 stocks. There is no way I'm going to go ahead and trade a stock that I do not even have a bit of information to go up with or to use in my favor. So there you have it, investors and future investors. Today's video is what option strategies that you're going to use. I am very curious to know which option strategies that you guys would have used on this trades in order for me to see if you guys are getting anything from my video. Now, if you guys want me to continue making videos of this nature where I could give you information and then help you decide how to use it in your portfolio, then let me know in the comments below. Thanks for watching. Go ahead, like the video. Subscribe to the channel. Make sure to hit that notification bell to get an alert when I post a video. But most importantly, if there's anyone out there struggling to grow a small account portfolio, then that's my specialty. The right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from that 9-to-5 job and make money with the stock market. Now, until the next video, keep pushing your investments.